Hey, Colorado Springs, Chris Lopez here with my co-host Jenny Bayless. And today we're going to talk about a single family rental that she recently closed on with a client. Jenny, good morning. How are you again?
Good morning, Chris. I'm doing great. How about yourself?
Doing really good. Just recording the morning of before our big first party. So I'm very excited. So it's gonna be a really good day. And
Yeah,
talking
I agree.
deals, gonna go talk real estate in person with no mask on, have a talk, have a drink. It's gonna be a really, really good day. So I'm excited. Anyway, back to this. So set us set us the stage for the client and his property.
Yeah, so this is a repeat client, and he purchased his first property with us back in February, I think it was. And he had recently leveraged his primary home because he had built a lot of equity in it. And he was using some of the equity from his primary to purchase a couple of rental properties. So he wanted to buy two in the Springs. So this is the second one, and we had been looking for a while. It was a little rough when we started looking for his second one. I think it was that March April timeframe when there was three houses for sale in the whole city. So we finally got this one locked up. It's a really great rental property. It's smaller in size. I think it's only like 900 square feet, and it's a three-bed, one bath. So everything's really condensed. But in my opinion, I actually think that's really good for a rental property because people are just looking for bedrooms. And the appeal of this one is that it has a really large backyard, so people with pets can take advantage of that. And it's right next to Fort Carson.
All right. So I'm gonna pull up the spreadsheet now. So single family rental, investment property. What was the purchase price and the purchase process like?
So the purchase price ended up being 291,300, and I'm trying to remember how we arrived at that. I think we were originally under contract at 295, and it did not appraise. I can't remember what it appraised for, but the client did have a gap on it. And then the 1,300 piece of it was part of a negotiation because, kind of jumping ahead a little bit, but it all makes sense, is that during an inspection, we found out that there were major structural issues that we were able to negotiate for the seller to take care of. But the structural company was booked out quite a few weeks. So we had to push out closing because the buyer did not want to assume the risk, via a vendor credit or an escrow into with title or anything like that, just in case they got down there and there were, more pervasive issues. So we decided to push out closing. And in doing so, the sellers didn't want to pay another mortgage payment. So that's where that 1,300 came in to kind of make both parties happy on that.
Oh, that's an interesting twist,
Yeah.
but it makes sense, and that's all part of. And this is why it's always interesting to talk about deals because everyone is always different, and there's always
hmm
those little nuances to where you can keep the deal together and then make it a win-win for both the buyer and the seller.
Exactly. Yeah. And it's really as simple as, the two agents coming together and saying, okay, to my client, this is what's most important. And then, the other person will say, well, to my client, this is what's most important. Okay. Well, there's definitely a really good possibility that there's a solution to make both parties moderately happy, in most cases.
All right, so 291,300 acquisition cost.
So he's all in at 11,500. So I just put 10,000 in that slot.
All right, so 10,000 for acquisition and about 1,500 for loan cost.
hmm
Seller credits, it sounds like zero.
Zero,
Initial repair cost.
zero.
All right, and then what's the down payment?
So I looked at his closing disclosure. It was 23%. And I never asked him how they came to that amount. So
Okay, well we will we'll go with that then. All right,
yep.
so 23%, all in for about $78,000 on a 291,000 single family rental. Interest rate.
hmm 3.875 for 30 years.
All right. So another great interest rate. So sub 4 that we're seeing.
Yep.
And then what's the rental income like on this property?
We're budgeting 1,600.
And then for vacancy, rent increases, all this stuff, we'll kind of keep our standard assumptions at 3%.
Mm-hmm.
And then property management.
So he's self-managing, so 0 for that.
And then repairs
8%.
and maintenance, 8%.
Yeah.
HOA?
No HOA.
All right. And then taxes, insurance, all this stuff?
So yearly taxes is $1,270, and yearly insurance is $1,134.
Utilities, are these owner paid or tenant paid?
They are all tenant paid.
Okay, so 0 for water and sewer, 0 for trash, 0 for electric. And then for lawn care and snow removal, is that on the tenant's responsibility as well?
Yes.
Okay, so 0 all across the board. Now I'm going to scan back up here again before we go over to the returns tab. Oh, for the rent income. So you're estimating 1,600. Is that pushing it? Because I know the last, quite a few deals that you've done recently, you and your tenants or you and your clients have opted to kind of be more aggressive on the rents. Like, hey, we think it'll be in at whatever, 1,400, and it comes in at 1,550. Like, you guys had some very aggressive rents. So where does this fall on the rent scale? On like that
so
rent?
I think this is actually spot on. You know me, normally I undershoot when we underwrite something, but I think 1,600 is very realistic. But I could be proven wrong. Maybe he'll get more than that. I don't know. But I think that's right down the middle.
Okay. So now going to the cash flow tab, we are looking at an annual rental income about $19,200. Subtract out vacancy, subtract out annual expenses. NOI is about $14,700. Less the mortgage payments of $12,600 a year leaves an annual cash flow about $2,000 a year.
Mm-hmm.
So 2.6% cash on cash return and a 5% cap rate. So for single family homes, I mean, these are good numbers.
Yeah. Yep. This is right in line with what I would consider a good single family deal in this market. 5 cap. That's, I've been telling a lot of people that anything in the high 4s for a single family is good. So the fact that he's at a 5, I think that's really good.
So I'm curious, if we added in property management, what would that do the numbers? So we'll say property management, what, 8%, 10%? What should we put in here?
Probably 10. I think that's appropriate.
So we'll say 10%. Now that drops it to basically like a break-even cash flow, about $100 a year. So we'll call that break-even. And it drops the cash on cash to 0.1% and a cap rate of 4.4. So is he self-managing because he just likes being hands-on, or is it to help get extra cash flow? Do you know his attitude on there?
Yeah, definitely to help get extra cash flow. He and I have had quite a few conversations about self-managing single family properties. And, we both kind of feel it's probably worth our time. $2,000 a year for him to go down once or twice a year. I think that's probably a good return on his time, just because single family homes are a little bit more hands-off in this case. Yep.
So I'm going to go back and just check out the property management on here. And so let's talk about this for a minute about his self-management, because I know this client lives up here in Denver. I think he's like Centennial area, if I remember correctly. So he's in like south side of Denver. For him to drive down to this property, how long is that, would you say?
About an hour.
Okay.
Yeah.
So an hour each way. So it's going to take, it's a morning or afternoon trip to go down there and do whatever, then come back up.
Mm-hmm.
But it sounds like it should only take him a handful of trips a year is the expectations.
Yeah, exactly.
Okay. And so, like I said, so from a high level, it's doable for people living in Denver to self-manage properties in the Springs.
Yes.
Okay.
I can attest to that because I had lived in Parker for, I guess, the first 4 years of owning Colorado Springs rental properties as a self-manager. So it's definitely doable. Sometimes it's kind of a pain, but, I've managed to suck it up and move forward with that. So,
and I would say it's worked because, I mean, you still self-manage. You've had great track record, and I've not heard you complain about it too much. So
Yeah. I think it's worth it, you know.
all right. So overall, we are still looking at an annual return of about 20% on, 21% on the money investing, then getting appreciation, cash flow, debt pay down, and tax benefits back. And do you expect, like, because the previous podcast record was a fourplex. This is a single family home. And I get this question for Denver, so I'm asking you this question for the Springs. Do you expect one to outperform the other in terms of appreciation?
Ooh, that's a really good question. I think if I had to make a wild guess, I think that the fourplex that we had just done, I think we'll probably see more appreciation in the short term because there's just no inventory. And I know we complain about the inventory of single family homes, but there's even lower, inventory in terms of what the general population size for multifamily properties. So I think that one, based on supply and demand alone, will probably see a little bit more appreciation until, I don't know, maybe if rates get a little bit higher and investors are less interested in just leveraging these larger properties. But I still think that single families, townhomes are going to see really, really good appreciation over the next couple of years here.
Interesting. So you actually think there might be a little bigger appreciation bump in the multis, huh?
I do, just because they're so rare right now. So
okay, well,
yeah,
we'll see how next year plays out. Because people ask me this question, I generally would think like you'll probably make a little more appreciation in single family. I did not think about the inventory, about just how, because we're the same way, we have very low inventory up here, and the multis is just super low. I don't think we're quite as bad as you guys for multis down there. But I never thought about how much just not having it in there makes a difference.
Yeah. And I think the interest rate is playing into that as well. So if that goes up a little bit, I imagine that it'll be less appealing to investors to park their money there just for the sake of parking it, which is what I think a lot of people are doing right now. Whereas we're on the hunt for properties that actually make sense as a investment property. So that's kind of what I'm seeing.
You're saying there's a lot of investors in general just park their money and they don't really care about the immediate returns?
Yeah.
Yeah.
Whereas our clients are more fundamental focused, which that's what we're looking for.
Yes. I agree. All right. So this is a really good rental. It's a single family that your client in Denver can self-manage. Solid numbers, going to be a solid long-term play here. What other comments do you have about this property just in general?
It was a really cute house. Whoever had lived there had done upgrades to the kitchen, bathroom. The exterior looked really nice, and now it's structurally sound. So I think that this will serve him well for many years to come as being just a really simple, straightforward single family home, hopefully.
Wonderful. So for our listeners out there, you said this is a pretty good deal, I think was the phrase you used. So is it an assumption right now from saying, hey, I'm looking to buy a single family rental in the Springs here, that if I buy something at 20-25% down with property management, I'll probably be about a break even. Without property management, I can cash flow a couple bucks a year?
Yeah, I think that's a really good blanket statement for where we're at right now.
Perfect. All right, Jenny, thank you as always. I've learned something. I appreciate it. And if listeners out there want to get in touch with you, best way is just to email you, right?
Correct.
Yeah. Email Jenny at envisionrea.com. And we'll get you set up. We'll talk the market with you. We'll figure out the right, strategy, figure out what your situation, your goals, mix up the capital you have, and then go out there and find a single family home, go out there, find a fourplex, whatever it is. This is what we do. So thanks, Jenny.
Thanks, Chris.